Good morning, everybody. Happy Friday. Oh, wait a minute. This is just me. Yeah, no, I'm broadcasting live. Sorry. I'm a little tired today. Um, I am just going to pop that link into the Facebook group if anybody would like to join us live. As I indicated, we're going to talk today about the two different ways that cost of goods sold is calculated when we do our pricing. Hold on just a second. It seems I can't talk and do two things at once this morning.
Can you hear me?
I can, and we're live. There we are. So I just popped the link in. Yes, I can. And hold on. All of a sudden, oh my God. Okay, there we go. So, as I said, we're going to discuss the differences in calculating cost of goods sold for pricing your handmade items versus cost of goods sold for tax returns. Specifically, we're going to focus on that labor costs this week. There was a topic in the group that made me think that there was some confusion, and I certainly hope I didn't add to that confusion. So I really want to make it clear this week. And next week, we'll talk about what the difference is between gross income, adjusted gross income, net income, and profit. So, two big things in the next couple of weeks. And just want to make sure that everybody gets this, because there is confusion, and like I said, I hope somehow it isn't something that you read that I wrote that misconstrued things. So, how are you, Janice?
Oh, I'm here. I was up way too late last night and I'm tired today, but that's okay. It's Friday.
It is Friday, and I think tired has just been like the name of the game all week long. Um, and I don't know really if it had anything to do with the time change. I just think I'm just plain old tired.
Well, you've been really busy this week too with extracurricular activities and
Oh, I've been playing in dirt. Look, I have tan lines.
Ooh.
Yeah, I got 4 feet of snow in my yard, and I have tan lines.
Well, you said you have about 6 to 8 inches fewer inches.
Yes. I am so glad. I am so glad. So just a little off topic. My extracurricular activities have involved helping my neighbor down in her big greenhouse at the bottom of our road. And yesterday I went down, and it said it was 105 in there. That was a lie. I mean, it was probably 80, 85. 105, I would have been like, huh, I need to go home. But 80, 85, I mean, I was in there in a tank top, and it would just, I was like, God, I should have brought shorts.
I was going to ask you if you did. You said you might.
Well, when I left, it had been really cloudy all morning long, and it's always weird. I mean, it doesn't take much to heat up a greenhouse, especially if the sun comes out for whatever reason. I mean, even for like 15, 20 minutes, it's really noticeable. I mean, we keep the heat on down there at about 65. So once, it gets above 65 and the heaters don't come on, but it's like there's 10 minutes, 20 minutes of the sun being out, and it's like you go from having a long sleeve shirt on to getting rid of it and just running around in a tank top. But
Yeah.
it feels really good to be active. Oh my God, I have sat way too much this winter.
Yeah. Me
Way,
too.
way, way too much. The body is like so happy. All of that stretch and lift and tug. Yeah. I can't, I can't make myself go to the gym, but I will go down there and, I mean,
Garden until you can't garden anymore,
yeah,
huh?
oh yeah, till I like feel like I need to crawl out the door and into my truck. So, because this is quite the topic, I'll get back on track. But it is Friday, and we're all tired, and we got that squirrel thing going on.
Yep.
So, when you price your handmade item, you want to take into consideration all your costs. And you also want to take into consideration and add in a fair hourly wage for yourself, even if you don't take a paycheck. Okay. Now, most of us, we're not going to take a paycheck. And we're expected to take the profit or the money out of our business as an owner draw. But we need to figure on making that owner's draw or our profit as if we were actually taking a paycheck. So this may be part of the reason that everybody gets confused. So let's say I'm going to make a hat. I have $10 worth of yarn. Takes me 2 hours to make it. I'm going to try and also add in to my cost of goods, which is that $10, because that's what I paid for the yarn. I'm also going to try and add in there a credit card fee in case I sell it, via credit card.
Yep.
Um, and any other little miscellaneous type fees that would go along, maybe an Etsy listing fee. Okay. So I'm going to take the cost of my yarn, the credit card processing fees, the Etsy listing fees, and add those things together. Those are my cost of goods as far as that one single item. Now, to that, I want to make sure that I'm getting paid for my time. Okay, so that 2 hours. So let's say out of that, I end up with like $15 in anticipated costs. I'm going to turn around and sell that item for 45 bucks. Okay, that means I end up with $30 in profit on that one.
No, it's
uh,
not profit.
uh,
It is revenue.
well, correct. Yeah. Well, no, because the revenue is the 45.
Okay, okay. Well, but that $30 is not necessarily profit simply because you have to take into consideration all of your overhead, which is, if you're, part of everything that you use to make that hat is
Uh, uh,
part of your overhead.
Correct. But when you look just at that one little piece, just that one item,
Yeah.
you're looking to make 30 bucks.
Well, yeah, but
Uh,
okay. I
Okay.
understand you're trying to keep it simple for the cost of goods sold. We're going to go into the whole revenue versus uh, profit next week. So I'm sorry. I should.
No, no, that's all right. Because it's like you and I know this. It's a very hard concept to explain to people who don't have that bookkeeping and accounting background.
Well, this is true too.
So this is like cost of goods 101 minus one. Um, so on that little scale, when you look at just that one hat, okay, you're looking to make $30.
Yeah.
Okay. Now, when you go and you put that into your accounting software, your revenue is going to be the 45. Your cost of goods is going to be that 15. Okay. And then you're going to have all of these other costs that come along through the month. And then you get to a bottom line where you've either made money or you've lost it. And that's where it gets confusing too, because when you start putting stuff into accounting software, it's not just that one-on-one relationship anymore. It's all of your revenue, all of your costs of goods, and then all of your overhead expenses. And then you finally get to that big bottom line.
That's sort of where I was going with that, and I should have let you talk. So, but yeah,
So that's and the one thing that we have to remember is, you know, in all of that, unless our business is set up in a structure where we actually receive a paycheck, labor, unless it's an outside person, and I'll get into that in a second, never shows up in our P&Ls. And so when we go to get our taxes done, it's like everything that we apply on a daily basis suddenly becomes different, because all of those numbers go into different buckets. Your revenue is still your revenue. Okay. That's the total amount of money that you received from everything that you've sold. But when you get to a Schedule C and it talks about cost of goods, there's a line item in there for labor. That labor is only for money that you either pay a W-2 employee that you employ, okay, or it goes to, if you're a designer and you send your pattern out for a tech editor, okay,
1099 employees, that basically.
yep, or a subcontractor or anybody who performs an outside service. If you were to pay your pattern testers, okay, that would go into the labor part of cost of goods sold on your tax return.
If you don't have a waged employee that gets either a 1099 or a W-2, then what goes in the labor?
Nothing.
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 How do you
Es-
tell? Okay.
Especially as sole proprietors, which most of us are, if we don't have a person that we either send stuff out to a tech editor or a pattern tester, anybody other than us, nothing goes there. We have no labor costs in that Schedule C. Now, some of us will actually have like an LLC that files their taxes as an S corp, which again, it's like I can already feel people going, "What the hell is she talking about?" Because even I sit here and say it's if and but or maybe. Um, so I think what I'm going to do is I'm just going to focus on sole proprietors and an LLC who files a Schedule C. We never take money out of our business in a way that shows up on our tax returns or even should show up on our business, other than the fact that we take it out as a draw and it shows up on our balance sheet. But that doesn't mean that when we're making something that we don't take into consideration our fair hourly wage. Because if we just sold that hat for the $15 that it cost us, we'd never make any money. So yeah, it's very, very confusing. And if you guys have questions, specific questions to you and your business, go ahead and post them in the group.
I think this is one of the reasons why Nancy always says you need a good CPA.
Yes, and the topic in the group, you'll find CPAs speak their own language.
They do indeed.
And because this is a whole quagmire, and just like, I mean, I'm sitting here listening to myself talk about this, and I'm saying, if I was somebody on the outside looking in, I'm not sure I would understand what the hell I'm talking about.
It,
You know, because it is bookkeeping and taxes. There's a rule, and then there's an exception to that rule, and then you can go down 99 exception steps to that original rule, and it's all very confusing. But bottom line is, when you're pricing your items, you want to include a fair hourly wage so that you hope at the end of the year you make a profit. When you actually record the stuff in your books, you're not saying I paid myself, $15, $20 an hour, whatever, you figure your fair hourly wages. That's not going to show up anywhere as a sole proprietor, except and you will take it out as a draw at the end of the year or throughout the year, and hope that you have enough money that you really did make a profit. But when it comes to taxes, if you, and I should have gone and downloaded one and shared it on the screen. Janice, go ahead. You talk. I'll go download a Schedule C.
you want me to tell? I'm sitting here going, okay, I understand the whole balance sheet thing, but when I haven't really done bookkeeping as a sole proprietor LLC, I do bookkeeping for a C corp. We're going to go and confuse people really well now. On our balance sheet, everybody that works here draws a salary. So I'm sitting here kind of going, okay, where would you see an owner's draw on a balance sheet if there's no salary bucket, as you put it? So
A owner's draw on the balance sheet is in the equity section.
yeah,
Okay, and if you're using accounting software, your accounting software is going to actually set up an equity section for you.
yeah.
And they simply call it owner's equity. And everything, all the money that you put in and all the money you take out gets posted to that one account.
I understand better now. Thank you for clarifying that.
Now, because and that also, owner's equity also in accounting software also includes your net income or your net loss from your business.
Sure.
So that gets a little weird, and most business owners, it gets squirrely about that. It's like, well, how do I know how much money I had to put into my business this year without having to, go digging through records?
Sure.
Or how do I know exactly how much money I took out of my business in owner's draw? So when I set up a bookkeeping system for a sole proprietorship, I have that owner's equity account, and then I have two sub accounts, one for owner's draw, one for owner investments. Now, the three of them still total all the way up, but you can see at a glance. Okay. And
That answered my question really, really well and clarified things a lot.
uh, good. um,
Well, for
it,
me.
well, it is because I mean, here at Sunburst, we're an S corp. Okay, subchapter S, which means small corporation. Ben and I get a paycheck, real paycheck. We do it once a month, and all the taxes are taken out. So for us, and just like you guys, when you do your tax return, your money shows up on the tax return under salaries and wages.
Sure.
Now, as sole proprietors, we don't have salaries. We don't have wages. All of our stuff comes in and out via owner's draw, which comes under that equity section.
Sure.
Now, if as a sole proprietor, I hired you, Janice, to come work for me because I was so big and needed help. Um, I would pay. I would pay you every week or every month or every other week, whatever we agreed upon,
Sure.
and then the money that I paid you would show up under salaries
Salaries.
and wages.
I see.
Now, because we're into this whole costing thing, if you made that hat, okay, and it took you 2 hours to make that hat, when I went to do my cost analysis on that hat, and let's say I paid you $15 an hour.
Sure.
Well, $15 an hour really isn't $15 an hour when you have an employee,
Nope.
because the company pays payroll taxes. Okay. Company would have to pay workers' comp.
I think a lot of people don't understand all of the costs that are inherent with an employee. You might as well, when you hire somebody, you might as well tack on 30% to their salary, because not only is, like Nancy said, you got to pay payroll taxes and you have to pay workers' comp. You also, for every dollar that your employee pays in Social Security tax, your company is responsible for matching that. And the company doesn't see any benefit out of that. That all goes to the government. So yeah, you've got all sorts of stuff. So a lot of people don't understand.
Yeah, and it's really, really, really crazy.
Yep. And then if you start adding in things like, you know, employer covered health care and 401k matching and all that other stuff, yeah, it's people. I had somebody I read had gotten, well, I didn't get into a debate with them because they were too damn stupid to debate. But I saw somebody on Facebook once saying that there was no reason why any corporation should make a profit. Just saw the look on Nancy's face. She's blinking. No reason why any corporation should make a profit.
How does that corporation pay their bills?
Well, how did I think
How did they
I
manage
think
to stay in business?
I think the person who said that wasn't thinking so much about expenses. But they don't really understand the whole tacking on an extra 30% for every, on an employee's salary and all that stuff. I think she was thinking about there was no reason why they should have enough money to pay shareholders or, and I'm sitting here going, I wonder if this woman has a smartphone. Because is she happy with her smartphone? Does she never want a newer and better one? Because most corporations, before they even start to pay off shareholders or pay dividends or anything like that, go and reinvest the money back into their company so they can make more things and grow their company and do research and development and make better products and generally employ more people. So don't even get me. I'm sorry. Hmm. Oops, I lost you. Are you saying anything? Or are you just letting me rant? Oh, I lost you. I can't hear you. I can't hear you. You're gone.
Sorry, Ben came up and I muted
Oh,
myself.
muted. Oh, is he laughing at me?
I told him he had to go away for about 10 minutes.
Yeah, yeah. So, but yeah. So there are all sorts of reasons that you should make a profit, other than the fact that you're just a greedy bastard. So,
Yeah. Yeah. Well, and that's probably a lot of what it is. When somebody makes a statement like that, they're thinking of those multi-billion-dollar corporations that are just handing money out left and right, and you know,
the vast majority, you're talking to what, Fortune 500 companies, so there are what, 500 of them. There
yeah,
are tens of thousands of corporations in the United States, and the vast majority of them are small businesses.
yeah.
And so when somebody goes around and says corporations are evil, they don't know what the F they're talking about.
Seriously.
So
Okay, I
my libertarian rant's over. Sorry.
I'm going to screen share and I'm going to show you the Schedule C. Hold on. There it is. Oh, look at that puppy. Okay, so here's the first page of your Schedule C. And you can see down here, number 4, cost of goods sold from line 42. Okay. When we go and look at, hold your eyeballs because I'm going to scroll to the next page. This is all your cost of goods calculations. Sorry, I ran too far. Okay, so here in part 3, all of this is cost of goods. Oops. Good God, my mouse is like crazy today. So when you look right here, number 37 says cost of labor. Do not include any
Include any
amounts
amounts
paid to
paid to
yourself.
yourself. Yeah.
Okay. So, cost of labor for your tax return is money that you pay to others. Okay. Now, in this respect, this is not your employees. This is like a tech editor. This is like your pattern testers. Okay. So this is an outside person or a subcontractor. Just think of it as any third party. Okay. And be very careful about using if I hired Janice as a pattern tester or a tech editor, she's not my employee.
No, I'm a contractor.
That's correct. Now, a lot of people will refer to their contractors as employees. Don't make that mistake, because once you say Janice is my, even if it's 1099 employee, okay, and this is verbiage. somebody's ears are going to pick up,
Yep.
because employee means you're paying FICA,
Yep.
Medicare,
Yep.
state unemployment, federal unemployment. In some states, it's state disability.
Yep.
Okay.
Social Security taxes. Yep.
Yep. Workers' comp.
Yep.
And they're just going to start looking for all that.
Yep.
So it's a 1099 contractor,
Yep.
an independent contractor, a consultant,
Yep.
or simply what they are. They're a pattern tester or they're a tech editor.
Some of your vendors are qualifying for 1099s too, but we won't even go in there right now.
Yeah. So when you calculate cost of goods for your taxes, you have to know the value of your inventory at the beginning of the year.
Yep.
Okay. You have to know how much you purchased throughout the year.
Yep.
You can take out and deduct anything that you took out for personal use.
Yep.
Okay. So if you bought, you know, yarn, okay, and you thought you were going to make this lovely hat, mitten, and fingerless glove.
Ensemble.
Yep. And with it and sell it. And you decided when it was all done, oh my God, I can't sell that. For one, it took me way too many hours. Nobody would ever
Pay for it.
Or, oh my God, I love that and I can't part with it. Okay. You can deduct from your inventory the cost of that yarn that you took out of your inventory.
How do you deal with the fact that you didn't pay sales tax on
it? Then what you want to do is you kind of want to.
I guess that falls under use tax when you're doing your
Correct.
sales and use tax return.
Yep.
Yeah.
Yep, that would go under your use tax. Okay. So then you have your cost of labor. Okay. And that's, again, do not include any amounts that you paid to yourself and or took as an owner's draw. Okay. Then we have other materials and supplies, things that we buy and use that doesn't go into inventory. So that would be all of those little miscellaneous parts and pieces that,
The googly eyes and stuff like that.
Yeah. I mean, unless they're eyes that are quite expensive where you're paying like $1 a piece or $1 a pair for them, then you want to put them into inventory and you want to make sure that, as you use, a 30 millimeter child safe eye that is $2 for a pair, you want to put that cost into the cost of that project.
Beads would probably fall under that that category too, as well as buttons, because you're going to have beads that come in big bulk and then buttons that come in big bulk, and then you're going to have the really neat ones that cost a lot of money.
Yeah. Okay. Now, other costs, this is just anything else that goes into cost of goods. That would be like, you could put in your PayPal fees, the credit card fees that you pay to the company, to credit card company, in order to be able to take credit cards for payment for your business. Okay. So, and then you add all that up and that gives you your cost of goods sold, which then goes back to the first page on line 4. Okay. So when you get back to your Schedule C, there's number 26, which is wages. Now, again,
This is
that
not you, right?
right. This is not you. This is if I hired you, you were strictly my employee for whether it was 40 hours a week or 20 hours a week that you worked for me. That's where I would put the money that I paid you. Okay. So it really is. It's very, very confusing.
Which is why you need a good CPA.
Yes, and nowhere on the Schedule C does it show owner's equity or owner's draw. So, it's kind of like it's just it's an assumption that if you are a sole proprietor, you're going to take money out of the business, but nobody tracks how much, which is kind of crazy.
How do you pay income tax on that?
Because when you take a draw, it doesn't show up anywhere as an expense. So it's not being deducted from the net income of the business. You pay federal and state income tax as well as self-employment tax based on the net income of your business.
Okay. Okay. That makes a lot of sense, actually.
And net income is at the very top. I'm going to stop screen sharing. At the very top of a P&L that is generated from accounting software, you have your revenue.
Yeah.
Okay. So think of that as the $45 for the hat times how many evers plus whatever other money that you made actually selling your product or service. Then you have minus your cost of goods. That gives you an adjusted gross income.
We weren't supposed to talk about that this week.
I'm just prepping everybody for next week. Then we have all of our overhead expenses, all of those things that we have to pay even if our business really isn't making any money. We've got website hosting fees, blah, 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 blah. And then you come down and then you have other income, other expenses. Okay. Other income would be like affiliate income. It's money that's coming in that is not derived from the sale of your handmade goods or the sale of your yarn or the sale of your tech editing expertise.
Yeah.
Okay. Now, other expenses, that's a weird one, and it would be it's mainly for bigger businesses. And sole proprietors come in many shapes, sizes, and forms. So, one of the best things I can think of is, let's say you have a landscaping business. You have a pickup truck. Your pickup truck was parked on the side of the road because you were off mowing somebody's lawn. Well, somebody else got stupid and they ran head first into your truck parked on the side of the road. Yes, people, it really does happen. And your truck was totaled. Okay. That's a loss. Okay.
Mhm.
And that would come in under that other expenses. For us, we probably don't have anything that's going to fall under an other expense. Um, but then way down at the bottom, after all of this stuff is added and subtracted and adjusted and blah blah, you have net income. And net income is what your tax liability is based on.
Yeah, that makes a lot of sense. We have run over and I need to go.
Ah,
I'm
yes.
sorry.
No, I need to go too. My husband's not skiing today, and boy, is he like, he's so antsy. I,
How does he deal with the summer when there's no snow on the
I,
ground?
oh, well, there's not 3.5 feet of snow in the yard. I mean, we're at that point where we really can't do anything. I mean, today it's even too soupy to like snowshoe,
Yeah. Oh, poor
and
Max.
uh, uh, poor Max. I know. Um, he was so excited this morning. I mean, it was like 40 degrees at 8 o'clock when we came to work, and so he went. He was going to troop out across the yard, and 85 pounds of dog every time one foot went down. Woof. So he just kind of turned around and looked at me like, "Nah, this ain't freaking happening today." Um,
Dottie was like that last night. It was pouring rain when it was time for her nighttime walk, and she was like, "Nope, I ain't gonna do it now."
yeah. So I hope this has kind of cleared things up. And next week we will talk more about that whole, you know, gross revenue, adjusted gross revenue, net income, blah, 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 blah. In the meantime, if you have questions, go ahead and just post them in the Facebook group, and we'll be more than happy to answer them. So until next week, everybody have a great week. See you then.
Bye
Bye.
bye.